Welcome to this week's market drama. We'll start with how the markets did. The S&P 500 was up 1.6% for the week, puts it up 5.4% year to date. There's a couple of different highlights here that drove market action. I'll start with macro data points, and then there was one speech that drove the markets on Thursday and Friday. So on the macro data standpoint, on the positive column, we had ISM service index data as well as PMI service data that showed that February was stronger than expected. And both of these data points suggest the economy continues to expand in the first quarter. The third one was we did have pending home sales also having a robust number. That's the second month of gains, right? So with interest rates where they are and mortgage rates where they are, this is in essence a pleasant surprise on one side. On the the negative column is that if the housing market continues to stay at a call it elevated levels of activity, that could drive prices higher, which is inflationary, right? But on the positive column, I think it is positive to see that home sales do continue, even though when mortgage rates are above 6%. On the negative side of this story was actually abroad in Europe. We saw core inflation, which excludes food and energy cost, tick up from January to February, from 5.3 to 5.6%. That's not good, right? In essence, you want to see disinflation, and that's not what they're seeing. The European Central Bank President Lagarde also made a speech indicating that a 50 basis points increase in their next meeting in March 16 is in the cards, right? So they're still maybe in the earlier stages of trying to fight inflation, continue to stay at elevated levels. So that's on the macro data side. There was also a speech made by Atlanta Federal Reserve President Bostic that did spark market rally on Thursday. He mentioned, here's a specific quote. He said, the Federal Reserve could be in a position to pause hiking by mid to late summer, right? So he's clearly on the side of the spectrum that thinks that the Fed is closer to finish their hiking cycle. Market likes to hear that. These are just speeches, but that drives the market intra-week. Next week, when it comes to the economic calendar, we have a lot more at store. And I think, frankly, this week was not necessarily like big highlighted data points. Next week, we have ADP employment data, job openings, initial jobless claims as we do every week. But we have the February labor report on Friday, and that's a big one, right? To give us a sense of how the employment picture looks. Outside of that, we will continue to monitor how the markets react to what we get next week. So stay tuned for that. Take care.